What if I told you the US could erase trillions in debt, not by printing more money, not by raising taxes, but by simply revaluing gold? I know that sounds extreme, but let's look at the facts. The US national debt just passed $37 trillion. Gold? It recently broke $3,400 an ounce for the first time in history. And just this year, Trump slapped a 145% tariff on all imports from China. This isn't just noise. These are moves that shake the foundation of the global financial system. And here's the kicker. The United States owns more gold than any country on earth. It's been sitting in places like Fort Knox for decades, valued on government books at just $42.22 per ounce. So, what if they just change the number? Let me show you exactly how that works and why this might be the boldest financial move of the 21st century. Part 1, the gold revaluation explained, simply. Let's break this down in plain English. Step 1. The U.S. Treasury holds gold. The U.S. government owns 261 million troy ounces of gold. But here's the catch. That gold is still officially valued at just $42.22 per ounce, a number set in 1973. At that outdated price, the entire U.S. gold reserve is worth just $11 billion on paper. So what if the government simply changed the price on its books? Step 2, the Treasury revalues the gold. Now comes the magic move. The Treasury says, okay, our gold is no longer worth $42 an ounce. It's now worth $3,370 per ounce. The actual market price, that change instantly revalues its gold reserve from $11 billion to $880 plus billion, without printing a single dollar or issuing new debt. Step 3, the Fed monetizes the gold. Here's where the money enters the system. The Treasury uses what's called the gold certificate account. Yes, this is real. It's on page 12 of the Fed's official accounting manual. They issue gold certificates to the Federal Reserve, who in turn credits the Treasury with newly created US dollars equal to the new gold value. It's like using gold as collateral for a loan, except you never repay it, and it's legal. Step 4, the Treasury now has trillions in spending power. At a revalued price, say $10,000 per ounce, that gold stash becomes worth over $2.6 trillion. At $20,000 per ounce, it's $5.2 trillion. Every $4,000 increase in gold price equal to about $1 trillion unlocked for the U.S. That's enough to wipe out a huge chunk of the national debt. Instantly. No need to borrow from China, no need to raise taxes, just revalue the gold and boom, money appears. So to recap, how does gold revaluation work? Reprice the gold on the government's books, issue gold certificates to the Fed, receive newly created dollars in return, use that money to pay debt, build infrastructure, or reset the economy. It's legal, it's powerful, and it could be the biggest financial reset of our lifetime. Has this been done before? Yes, and history tells us exactly what comes next. Part 2, historical precedents. It's been done before. Sound radical? It's not. The U.S. has done this before, more than once. Let's go back to 1934. The country was in the middle of the Great Depression. President Franklin D. Roosevelt revalued gold overnight from $20.67 to $35 per ounce. That's a 69% increase. Just like that, the government created billions in additional value without printing a single new dollar. It gave them room to spend without raising official debt. Then came 1971. President Richard Nixon took it further. He raised the official gold price to $42.22 and broke the dollars linked to gold altogether. That was the end of the Bretton Woods system. So why does this matter? Because every time the U.S. has faced a major fiscal crisis, it's used gold revaluation as a tool to inject liquidity, shift the system, and reset the rules of the game. As former Fed Governor Lyle Gramley once said, gold revaluation may sound extreme until you realize it's already part of our playbook. And today, we're facing a crisis of similar magnitude. So the question isn't if it can be done, it's why now? Why are gold prices breaking records? Why is Trump pushing tariffs again? And why are central banks hoarding gold like never before? Let's connect the dots. Part 3, why now? The perfect storm. Why? Let's look at the signs. Because the timing, it's no accident. First, tariffs. In April, President Trump added a 145% tariff on all Chinese imports to the United States. That's not a typo. 145%. That's a global economic shock in the making. Now think about China. In December 2024, they dumped $14.7 billion worth of U.S. Treasuries, bringing the total for the year to over $50 billion. They're getting out of our debt markets, and fast. So while China is selling off our paper, the US is leaning harder into trade barriers. Now layer in gold. On April 21st, 2025, gold broke $3,400 an ounce, an all-time high. And this isn't retail investors driving it, it's central banks. They're buying gold at record levels, shifting out of dollars. So here's the bigger picture. China is ditching treasuries. The US is walling off trade, gold is spiking, and the Federal Reserve is boxed in by inflation and politics. Some people think this is just chaos. But what if it's not? What if it's a setup, a calculated strategy to weaken foreign holders of our debt, then flip the system by revaluing gold? That would put the US back in control, while everyone else scrambles to catch up. So let's talk about the winners and losers in a gold reset. Part 5, winners and losers. Let's be clear, a move this big always creates winners and losers. So who wins? The United States. Why? Because it holds 8,133 tons of gold, more than any country in the world. If the dollar is repegged to gold, or if gold is revalued sharply upward, the US instantly strengthens its balance sheet. It gets to rewrite the rules on its own terms. And who loses? Start with BRICS: Brazil, Russia, India, China, South Africa. They've been dumping dollars and buying gold for a reason, but they're still sitting on hundreds of billions in US debt and fiat currency. If the dollar is suddenly backed by gold again, at a much higher value, their paper wealth takes a hit. Then you've got US allies like Japan and the EU who may feel blindsided. They've supported the dollar system for decades. But if the US resets the game without warning, trust will be shaken. And the real risk? Retaliation. BRICS could fast-track their own gold-backed currency, creating a competing reserve system. That would split the global economy and add fuel to the fire. And for the average person, just imagine what happens to prices if gold skyrockets overnight. Inflation could hit hard. We're talking about $50 gas or worse. But here's the real question. What does all of this mean for you? And how can you prepare or even profit if this reset really happens? Part 6, what this means for you. You don't need to be a billionaire to prepare for what's coming. First, consider adding physical gold to your portfolio. You can find reputable sources at places like Costco or verified precious metals dealers. Physical gold is a tangible asset that holds value even when markets get shaky. If buying and storing gold isn't for you, gold ETFs like GLD or IAU offer a more accessible way to invest in gold without handling the metal yourself. When it comes to mining stocks, it's smarter to invest in mining ETFs rather than individual companies. This spreads your risk across multiple miners, protecting you from company-specific pitfalls. Diversification is key. Balance your portfolio with a mix of gold, dividend-paying stocks, international real estate, and even silver. These assets can help shield your wealth from volatility in any one area. Remember, this kind of financial shift takes time. Don't panic or rush. Stay rational, keep your goals clear, and prepare patiently. And now, with these steps in mind, let's zoom out and look at the bigger picture. What all of this means for the future, for your money, and for the economy as a whole. Part 8. Final thoughts. This isn't some wild conspiracy theory. It's a well-known strategy that history has already shown us, and it might be happening right now. Gold has recently passed $3,400 an ounce. Meanwhile, central banks around the world are quietly hoarding more gold than ever before. At the same time, tariffs keep rising and foreign holders are under pressure to sell U.S. treasuries. This adds fuel to a potential financial reset. And Fort Knox? It's not just a symbol. It literally holds the key to this whole system. History has a way of repeating itself, from FDR's gold revaluation in the 1930s to Nixon's move in the 1970s. And now, we may be on the brink of the next big reset. Maybe this isn't chaos. Maybe it's the most calculated financial strategy of the century. Behind the scenes, world leaders gather at Davos, the G20, BRICS summits, each maneuvering in a high-stakes game that could redefine global power. Meanwhile, here at home, decisions made in the halls of the Capitol could be quietly reshaping the world's monetary order. Is the Great Reset already underway? Only time will tell. If you found this video helpful in understanding what's happening behind the scenes, please like this video, leave a comment with your thoughts or questions, and subscribe for more updates on gold, the debt crisis, and smart investing strategies in uncertain times. Thanks for watching. Have a nice day.